Evening, guys. Very short video, just going over the strategy before we start training again tomorrow fully. I hope you're all excited as I am. So yeah, we'll get straight into it. So obviously we know now that there's only three setups that we're looking to trade with the strategy, and that is an anchor reversal, a 50-50 bounce, or a reset off the mail. The reset off the mail is effectively a 50-50 bounce. So really it is only two setups, but when you look on the one time frame, the 1 hour, that's we'll just class it as three setups. We know the anchor reversal has to be clean and perfect like this. No choppy. We want M's. We want three hits. We want head and shoulders. And we know we're not going to take half bats for reversals. It's too dangerous. And obviously sharp fin first leg with divergence on the TDI, and then obviously the TDI confirmation, the shift candle, no pins through the 13 and 50 EMA. The only change that I did make for the reversals this year is, so if it's negative after 4 hours, just kill the trades, move on. What I found at the end of last year was a couple of reversals that we did hold too long. At the end of the day, when a reversal isn't ready to go, it doesn't go. And usually you're going to get a Judas candle back to the high or back to the low, and it can be quite large and aggressive. So if a reversal's not went within the first few hours, you really need to start thinking, is it ready? And I think 4 hours gives it all the opportunity in the world to go. So if after 4 hours it's still not gone, or not in any profit or even negative, then just move on from that trade instead of holding until break of the EMA and then you get that Judas candle firing through and lose a lot more. I think with reversals, stick to the time limit of 4 hours if we're not in any profit. And we know everything else with the reversals. For the 50-50, obviously everything's the same. You need the anchor on the mail on the lower time frame. You need the 1 hour candle close through the 13 EMA and through the signal line on TDI, the RSI through the signal line, and then obviously on the lower time frame, you'll need full TDI confirmation with an anchor, preferably short from first leg, and always your 1 hour candle close. The extra little things to look out for this year with the 50-50s is always make sure that if it's a sell, so looking at TDI again, if it's a 50-50 sell, I've got lucky here where I've drawn this, that the baseline's crossing over. You either want, as you're entering, you want the market baseline crossing below the 50% on the TDI, or it's already below. But one thing that we wouldn't be doing is selling this if the market baseline is up here. So from now on this year, it's another thing to pay attention to, and it's another way that's going to avoid us maybe missing some of the 50-50s that look perfect and then they don't work out, and we're like, everything was right there, why did it not work? And it's little things like the baseline was the wrong side of the 50% and wasn't quite ready. So it's another thing that's going to get the win rate up, get us more consistent, um, and have us trading less, only taking the very best. If you back test all the best 50/50s from last year and years gone by, you'll notice the same thing. Every sell, it's below or crossing below as it's shifting, and every buy, it's above or crossing above as it's shifting. So really important to look out for that. Also, so with the exits, obviously, if it's a single leg like this, if the 1 hour candle closes back above the 13 EMA, then kill the trade. Because chances are it's coming up for a second leg. You don't know if it's going to hit the stops. You'd rather get out there, lose maybe 5, 10, 15 pips than it hit your stop loss, you lose 20, 30, 40 or worse. And plus, it's no fun being in drawdown, waiting on that watching the second leg come closer to your stop loss and just hoping that it goes without hitting it. But we know most times it's going to hit it and then go, or just do something completely different and go even higher and higher. So, yeah, single legs and the same on the 4 hour as well. But with the 4 hour, of course, you would need the 4 hour candle to close the wrong side of the 4 hour 13 EMA to then exit the trade. And then you can always get the re-entry if the second leg's made and then it shifts back, then you can enter again. But single legs, break of the 13, exit and wait. Now for double legs, so when we've got a double, we're going to put the stop loss safe, give it breathing room, not there, obviously, always a little bit of breathing room. When you put the stop safe there, and that's it. There's no more scratching. It's hold until stop loss or TP, or obviously you've got your intraday times as well. So if it's a 1 hour setup and it's still messing around here and then it's 7 p.m., then you're obviously going to scratch. Or even if it's down here, you're going to scratch. 7 p.m., get out. Intraday times. Of course, if it's down here, you can buy 7, it's played around and then fired down, close most of it, and then you can hold the rest and try and get the swing, the 3 levels in shark fin for the 1 hour. But yeah, for the the double legs, you're going to hold stop loss or TP. And TP on the 1 hour charts, remember, depending on the pair, 30 to 50 pips every time now. For 1 hour setups, 30 to 50 pips. We're going to be booking between 60 and 80%. Every trade's different, but between 60 and 80% will be booked every trade now. On the 1 hour between 30 and 50 pips. The 4 hour can sometimes be a bit more. Depends on the time. It depends on if there's EMAs in the way or pivots. Like, you need to obviously manage every trade differently, but to have that consistency there that we're always going to be booking on 1 hour setups between 30 and 50 pips and 4 hour setups between 50 and 100 pips. And all of that's in the new part of the notes that I made. And gave you all a copy for. So hopefully you've all joined that, and that will like help guide you as well, so that you know exactly how many pips you should be going for on each pair and on each setup, whether it's 1 hour or 4 hour. And yeah, when you're getting to that 30, 50 pips mark, that's when you just need to be booking profits straight away. Too many times last year we were getting trades right. We were getting 30, 40, 50. Sometimes I remember a couple of times last year I was up 70, 80 pips on trades, and then a couple hours later, I'm back at zero. That's that's unforgivable and cannot be happening this year. So just watch the blues, just roll in when we're booking profits and not being as greedy this year. No more going for hundreds of pips, you know. I mean, we can do, but that smaller position swinging, get that intraday day profits booked, get the confidence up, get the emotions out of the trade, and then you can hold the rest and try and get as much as possible, and make more profits. For the 4 hour double legs, so for these, from what I've saw from the back testing, when you've got a 4 hour double leg 50-50, put your stop loss safe, obviously keep your risk correct, and I just want to be holding that trade now until stop loss TP. So until it either hits your stop loss or until it hits your TP targets, which is again between 50 and 100 pips, depending on the pair. And then obviously 4 hour setup, you're looking to swing it as long as possible. But yeah, with these 4 hour setups, they're so powerful, especially the double legs, that once that's set, just hold the trade. And also for the 4 hour setup this year, I don't want to use exit rules for intraday times. So for the 1 hour setups, of course, we know for 50-50s, it's 7 p.m. for yeah, 7 p.m. exits for the intraday 50-50s, and reversals up to 9 p.m. But for the 4 hour 50-50s, there's no intraday trading times to exit. Of course, we're still looking to enter at our usual times between 8 and 11 and half 2 to 6. But we can hold trades at all times and through the night. Now, I'm not saying I would be holding a full position if it's not moved in 8 hours and it's still here. I'd close half, but I would still hold the other half, because 9 times out of 10, you're going to wake up in the morning, it's down here, and then it's going to do a straightaway, and it's down here. And we're missing too many last year. Getting in a trade that's good, but then exiting at the end of session, end of day, and then missing the move the next day just didn't let us back on. And then sometimes that would then trend for days, if not weeks. We'd missed hundreds, thousands of pips sometimes. So when these 50-50 double legs are in, we make sure we've always got a position on as until stop loss TP, because I'm that confident on these setups that more times than not, it's going to hit our 50 to 100 before our stop loss, guaranteed. Again, with the single legs, on the 4 hour, breaks the 13 EMA on the 4 hour candle close, you exit. You could, but again, no intraday time. So even if it's a single leg, just before Asia, close part of the position so that you're not holding a full position through the night, but still hold the rest. If you wake up in the morning and it's 4 hours closed above the 13, then of course you scratch the trade straight away. If not, then you're still holding it and holding it and holding it until it either breaks the wrong side of the 13 MA or until it hits TP 50 to 100 pips. So booking profits at the amounts every trade every time is going to be a game changer for sure, because yeah, there was just too many times that we're holding trades too long. They were going 50, 60, 70 pips, and then we weren't booking profits and we're ending up with a lot less or nothing sometimes. Also, for the single legs, um, when it comes to risk, 2% maximum, but then the double legs, 3%. So single leg, you're not going to risk any more than 2% of your account size, because you do have that chance it will come for a double leg. And if it breaks back above or below the 13, the wrong side, then you'll scratch. And if you're only risking 2%, you're going to obviously lose less. But then once that double leg's in, you're more confident. It's a much more solid trade, so you can risk more, go for that 3%. Or, of course, with the multi legs, you can look for pullbacks. So you could still risk your 2% in here and then pull back to the mustard to get your other 1% in. And then there's your 3. But don't be risking 3 and then also doing a pullback, because then before you know it, you're risking too much, 4 or 5%, which is too much. So I went over everything. So obviously with the swing trading as well, for the 1 hour swings, you can get in there, book your 30 to 50 intraday, and then you can hold the rest until you see 3 levels and a shark fin on TDI. So as soon as you count a minimum of 3 levels, and on the third, if there's a shark fin down here, then you're going to exit the trade. Jaden done an amazing trade at the end of last year on G-Chef, perfectly. He got in on the first 50-50 and he got out 3 levels in a shark fin before it ended up firing right up. So he managed that trade perfectly. For the 4 hour swings, it's different. You don't bother about levels or shark fins. You're just holding that until it breaks the wrong side of the 4 hour 50 EMA on 4 hour candle close, or just an amount of pips that you're happy with. Of course, don't be greedy. You can still be booking profits at the end of each day, and just keep closing parts of the position and holding more. But some of these 4 hour setups, they can go 500, 750, 1,000 pips. Big, big, big moves. If you get even one of them a month, that's an extra chunk of income every month, along with your intraday trades. So even holding like smaller entries, 0.2, 0.3s, like when you're hitting that amount of pips, it's big money. It's nice, a nice extra chunk. It's like a monthly bonus. That's a way to look at it. But we're not so worried about looking at the 4-hour levels because we see the 4-hour levels sometimes are going 4, 5, 6, 7 levels, 10 levels. Sometimes they're just trending for months. So more worry about it re-breaking the 50 EMA, or just if you get to 500 pips, 750 pips or whatever, then that should be enough just to be like, right, what a trade, boom, grab. And with the swing trading, of course, don't move your stop loss too soon. So if you get in there, don't move your stop loss until this has happened and it's moved down. Then you can move it to there. So for when it moves down each level, you trail your stop loss down with the new stop hunt market structure that is made, especially with the 4-hour trends. Because we know they can just hold for days, or they can fire up a big pin from maybe non-farm or something, grab the stops and then continue. So just always make sure your stop loss is safe above or below previous market structure. And then as the trend continues and moves to the next level and then does its next stop hunt, and then there's a new market structure like anchor to work off, then you'll move it to that one and trail it up, so on. So yep, I think that's it really. Just yeah, we know we only go for the first pullback after an anchor reversal, or the first pullback after a reset off the mail. Um, so of course we wouldn't go for this reset off the mail either, because so this is the first 4-hour 50-50 bounce, first reset off the mail. We can take this in here, and we can also take this because it's the first pullback. With this one, because the second pullbacks aren't as strong and you won't see as much success or consistency with them, we'll miss this move, but then we can always get this move. Once that 1350 cross, it confirms the reset, then that's when we're looking for 50-50 and then continue trading that 4-hour cycle. Even when we've got 3 levels on the 4-hour, we can if it we can still keep continuing to trade the 4-hour trend. Of course, the way I've drawn it here, 1350 have crossed back up, so then the 4-hour bias would change and we'd be looking to buy in there. Also, if we're trading 4-hour bias, we're not worrying about the mail. So yeah, maybe this, if you got in there, this would be a point to book profits, but don't be scared to trade higher, because as far as I'm concerned, when we're trading the 4-hour bias, I'm not wanting to be worrying about EMAs as roadblocks. I'm not going to think, oh, it's going to come to the mail and do a 4-hour reset, a daily 50-50, and then all for it just to continue up anyway. And we should have just stuck with the cycle. So just worry about the setup and trading the 4 hour bias. We don't trade 4 hour reversals anymore, so we would miss this move because it's not safe enough, not consistent enough, but then we get this move. Or what potentially can happen as well is it would fire back down. We're not taking this, but then we're taking this. Because obviously this would be a reset on the Mayo in the 1 hour. It would be a 1350 cross from that reset of the Mayo, and then that would be the first pullback 50-50 to then continue the 4 hour bias. So not over anticipating any 4 hour reversals, just trade the trend until it changes, and then that's when we change our bias. But yeah, I think I've covered everything there. So good to go. So I'll speak to you all tomorrow. Hopefully, yeah, you're all ready to go. And any questions, just let me know. All right. Cheers.